Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar keeps on a bearish path overnight as it descends further and now takes on the challenge of this level of 77.70. This level was viewed as a hedge fund support region, being a 60-day moving average. And also the fact is CTAs, which are hedge funds, also known as commodity trading advisors, may take upon this level of either defending it and stage a firm rebound from this level back towards the region of 78 to 78.5 cents. Failing to do so, then this would actually expose a break towards 75 cents as an objective. But we would need confirmation first from the break of 70, and then we need to see a 77.45 offer to support the decline towards that objective. On the day, however, I do expect to see the range hold within 70.25. Overnight, the US dollar was a little bit slightly on the wobbly side, purely for the fact is that we had two Feds speaking overnight. One being Patrick Harker, and the other one being Bill Dudley. It is viewed that from both the comments from the Fed officials, first of all, William Dudley said in an interview that if the US economy keeps getting stronger, then the central bank may be justified in raising rates 4 times this year, not 3 as currently indicated earlier. And then on the flip side, we had President Patrick Harker speaking. Now, he came out and said that he was open to the US central bank raising key borrowing costs as a March policy meeting could see a rate hike there. So let's see what happens. But in the due time, the euro is trading in a 22.15 to 22.90 band after briefly testing towards there, and rejected that level. At the moment, I still hold the objective to 121.80.90 and reassess from there. Well, the dollar yen case is still slightly on the weak side, but now looks towards the support that comes in at 108.50 or down towards 108.15. I expect to see this level hold. I am not bearish towards this region, and currently, if we see a rebound from there, should look back towards the 109.65 area, which is where I favour. Well, the pound stabbed up towards the top side resistance around that 140 area and clearly rejected. Overnight, the Bank of England sat on the sideline after its rate decision. However, still appeared a little bit to the hawkish side in raising rates, with the rise of inflation in the UK still above the bank's target 2%. It is ascertained, though, the Bank of England may unexpectedly shift to 2 rate hikes this year from previous one. Therefore, at the moment, we should see a slight weaker pound coming into the market, with immediate support seen at 138.65, with the objective, I believe, still holds to 136.2030. Well, the gold rebound in front of that level of 1,297 to 1,300. And from the rebound does suggest that we could see a further rise towards 1,324 to 28. Support on the day is seen at 15. Moving on to oil, the bearish course for the West Texas Intermediate remains into negative territory as traders still show concern of the growing US oil supply and output. So far, we have seen since the retreat of 66 that crude oil has remained on the biggest weekly slump since March. And at the moment, it still looks towards now, not 60, but 59.80 to maybe 59.10. Any advances should find a cap around 61.10. So that wraps up for today. Thank you very much for joining me, and I hope you enjoy the day as well as the start to the new weekend.